What's up guys, my name is Ignas, welcome back to the channel. Last week we did a dividend comparison between Walmart, Costco and Target, where TGT got 3 points out of 5 and was the best out of that bunch. You can check that comparison out, I will leave a link for it in the description below. So coming from that, today I want to take a look into Target specifically. 2 weeks they reported numbers and the stock had a huge sell-off. On May 17th it was trading at $215 per share, and the day after it was almost $60 down to $161.61. So that was a scare drop for the day of almost 25%. Overall, they aren't doing well this year, with the stock down for 27.94%. In 1 year it is pretty much the same, minus 26.46%, but in 5 years the growth is quite decent, with the stock going from $55.52 from 2017, up for $111 per share even after the recent drop, to $167.14, higher for 201.04%. The drop means that Target is now again under $100 billion, with now a market cap of $77.5 billion, but this also means that the price to earnings went down, and the stock is now trading at a PE of 13.85, with the dividend yield also hiking higher, now at 2.15%. So to check into the stock further, first we'll take a look into financials and fundamental ratios, then where analysts think the stock will be trading next year, after that what Superinvestors and insiders are doing with the name, and lastly we'll go through the technicals of the price chart. I believe that this could be an interesting one to look into, so let's start. So first we will take a look into revenues, and this is the history of the last 5 years. Back in 2017 they were bringing in $70 billion on the trailing 12 months. After a year in 2018 that was up to $73 billion. 2019 we had it at $76.2 billion, and 2020 just over $80 billion on the trailing 12 months. So revenue has been increasing consistently there, but after that it even accelerated up. Another year passes and we have it at $98 billion, and now with the most recent quarter in, revenue was over $100 billion on the trailing 12 months at $106.98 billion. So in 5 years there was only one quarter where we had a year-over-year quarterly revenue decrease, and that was the last quarter of 2018, with a real incremental decrease of minus 0.02%. But other than that we only saw increases, with largest ones being in 2020, where for the second quarter Target reported a quarterly increase of 24.72%. So a quarter increase to $23 billion from $18.4 billion back in 2019. Overall revenues have been consistently increasing, so I'll put that in as a positive, but this year with consumers slowing down, there is a possibility that Target will be reporting smaller quarters too. So that is also something to take a note in. Now next will be price to earnings, and this is the history of the last 5 years. Back in 2017, PE was at exactly 10. Then in a year with the price going higher, PE increased to 12.18. 2019 a slight increase to 12.71. As earnings kept on going sideways, in 2020 we had price to earnings at 19.63, and then when the price started surging higher in 2021, but earnings was not yet going up that fast, we had price to earnings stopping at 20.51. That was similar after the second quarter of 2021, where we had the price at the highest of $257, but with earnings also surging up, so price to earnings was at similar levels at 20.48. Interestingly enough, a year after that the price decreased, so we now have the price to earnings at 13.82. So now we are not anymore in those price to earnings highs where the PE was over 20, closer to the levels we saw in 2018, and of the last 5 years it was only in 2017 where we had the price to earnings under 13 then closer to 10. Now let's check the shares outstanding, and this is clearly a chart that we want to find. So back in 2017 they were at 0.555 billion shares, then in a year it was decreased to 0.541 billion, another year goes by and in 2019 the decreases go up, minus 3.88% year over year to 520 million shares. 2020 decreased to 506 million, a smaller decrease but still a decrease in 2021 to 503 million shares. Then after the second quarter of 2021, we were already under 500 million shares to 0.498 billion, and now with the most recent quarter in, there was the second largest year-over-year quarterly decrease in 5 years, down for 6.96% to 468 million shares outstanding. So in 5 years, Target went from 555 million down to 468 million shares, which is in fact a decrease of 87 million shares outstanding. Now if we take the current market price of $167 per share, that was a stock buyback of $14.5 billion in 5 years. Now the next metric is the dividend yield. So back in 2017 the yield was at 4.27%, then in a year in 2018 with the price going up the yield went lower to 2.99%. For 2019 the price didn't move much, so the yield stayed there at 2.98%. But after that the price started moving up. So 2020 we saw the yield at 1.93%, and then 2021 yield bottomed at 1.15%. But interestingly enough, we now have two changes here. By the end of 2021, the price started going lower, and they have also increased on the dividend payout. These things and the recent sell-off meant that we had a surge in yield, which is now over 2% at 2.14. So the payout has been increased consistently, and even more so last in this year. But the yield is not yet as high as it was even prior to 2021. To further check on the dividend yield, we will go into my dividend investing watchlist. So we are in the watchlist on Google Sheets, and this is the tab for target. Here we have that same dividend yield history of each quarter for last 5 years. And we calculated that on average in 5 years, the dividend yield was at 2.49%. So best time to get in was back in 2017, where we had the yield at 4.27%, 71.35% higher than the 5-year average. Then in 2018 we saw it bottoming at 2.99%, 19.99% over average, but by the end of 2019 it crossed under, 6.9% lower than the average. Then it kept going lower in 2020 with 1.63%, 34.59% under average, and bottomed in 2021 with 1.15, 53.85% under the 5-year average. And we still had it over 30% under average in 2022, but after that recent sell-off, where we now have the yield at 2.3, it is now only under average for 7.70%. So we are nowhere near in the levels that we saw back in 2018, but we are moving higher, and if we do get more red days this year, we could be seeing the yield going back over this average again. Now if you would be interested in doing a similar analysis for yourself, you are able to do that by following the first link at the top of the description. Otherwise, feel free to add the ticker symbol in a comment below, and I'll consider adding it into the watchlist myself. Maybe there are interesting opportunities there that I'm still missing. So we did look into the history, but now let's check expectations. Where the analysts think the stock will be trading next year. Here we have 30 price targets of analysts. Numbers range from the lows of $165 to the highs of $288 per share. The average out of it is $210.87, and currently the stock is trading at $167.14. So analysts predict that for next year the stock should go up by 26.2%. Now let us take another angle. So here we have earnings expectations for next year. And out of 25 analysts, they suggest that next year target will be bringing $13.30 per share. If we assume that the price-to-earnings ratio remains the same, then this would lead to an increase in price of 25.5%. So the range here is quite low, but overall analysts are quite bullish on TGT, estimating that next year the price should go up between 25 and 26%. So now let's go over to Superinvestors. But not much excitement going on here. Currently there's only one portfolio that is holding, so Mears and Power Growth Fund now has 180,000 shares, which is valued at over $38 million and takes up a small part, 1.71% of their portfolio. So there is one fund still holding, but if we go a bit further out, there was one more fund interested in Target, and that was Maverick Capital. Last time they bought in was Q3 of 2020, but for the next 4 quarters they have been selling out. The majority of that went in the first quarter of 2021, with a reduction on the position of almost 99%, and then they fully sold out in Q3 of 2021. So now we only have one fund that is still holding. If we take a look into insiders, there's not much optimism there too. So in the last 6 months they did 0 buying transactions, but they did sell for 35 times, and these sales in total are valued at over $40 million. So not much positive going on in this part. Now for the last part, let's take the chart. The price stopped back in November of 2021 with a highs of $269 per share, but after that it was unfortunately going down. On December 20th, price dropped to the lows of $214.60, which was right there at the 300-day moving average. That acted a bit as a support there, and again the same on January 18th of 2022. But then the price went under, tried to go back up on February 1st, where we had the 100-day moving average crossing under the 200 one. So after that, the price continued going back lower. And in a few weeks we had this bottom on the 24th of February at exactly $184 per share. Now there has been some positive price action after that, where on April 21st we saw the highs of $254 per share and relative strength index over 70 and 71.5. But then the price again rolled over. We had the 12-day moving average of the MACD crossing under the 26th one, and relative strength index going back lower to 50. That continued up until earnings, and then after on May 18th, there was the huge selling volume. Relative strength index dropped to oversold at 18.9, and distance between the MACD lines increased to the lower direction. Now the last 3 days were quite decent. The relative strength index is already over 30 at 32.7, and the MACD distance is closing lower. But unfortunately we will be getting the moving average crossovers. First one is the 50 going under 100, but the worst one is the 200 moving average going under 300. This could be putting more pressure for the stock to go down again. So we did go through all the steps, and now let's take a quick recap of what we found. In last 5 years, revenue has been consistently increased. It especially accelerated in 2020 and still keeps going up. Recent sell-off made the price to earnings go down, but it's still not the cheapest of the last 5 years, as we are still back to the levels we saw in 2018. Now Target has been buying back shares, and in 5 years they managed to reduce their shares outstanding by 87 million shares. The recent sell-off also made the dividend yield go higher, but it's still now below the 5-year average for 7.70%. Though analysts are quite bullish, as in 1 year they predict that the stock price will go up from 25 to 26%. As for Superinvestors, unfortunately only one fund is still holding the stock, and in the last 6 months insiders have only been selling. We checked technicals, so relative strength index is now just over 30, and we could soon be getting a bullish crossover in the MACD, but unfortunately with the drop we are getting bearish crossovers in the moving averages, and the 200-day MA is about to go under the 300 one. So that was it for today. Make sure to support the channel and leave a thumbs up under the video. What do you think, is Target a worthy pick right now? Share your stance or your position in it in a comment below. If you would be interested in getting access to my dividend investing watchlist, then consider memberships. By becoming a member you will get access to Discord, where I share all my Google Sheets documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I did an analysis on another company, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing you all in the next one.